particular sectors. And the overall Nifty 50 is there, which has the top 50 companies of India, and Bank Nifty, which is the banking sector, and those two are the most popular indices in India. Okay, so let's see about Nifty. We are not doing it from the perspective of a short-term investment, and therefore we will go on a higher time frame. Okay, so right now it is on a 1 hour time frame, but we'll go on a higher time frame. So this is a monthly time frame, right? So each candle here represents 1 month, and we have data starting right from 2013 here, right? So this is over the years how the Nifty has performed over the years, right? So, and the averages that we have taken, the indicators that we have taken over here is a moving average, which is a 10-period moving average, which is a faster moving average, and a 20-period moving average. So each, when we look at it from the monthly perspective, each when it's a 10-period, it is showing the average for the last 10 months, and the 20-period is showing the average for the last 20 months. Okay. Now, we are actually looking, the best time to do this, the best time to invest is here, somewhere right here, when the crossover is happening. Okay, when the 10 moving average is actually crossing over the 20 moving average on a monthly time frame, which means the market is being prepared to turn extremely bullish also, right? And also, like you can see here, which where the 10 moving average has gone down and crossed down the 20 moving average. That's a dangerous signal. So this has happened in March 2020, which was the COVID crash, when the market crashed by 40%. So you see that it also helps in knowing when the market is actually crashing. And if you want to get out of stocks, we want to get out of stocks right there at that point of time. Long-term investments. We're not talking about short-term investments here. We're talking about long-term investments. And the crossover that happens over here is a bullish crossover, when the 10 is crossing the 20 from below and going upwards. And you can see in the months above, it has traveled a lot of distance. Right, it has the market was here somewhere around 11,800, and it went up to 18,000, and now it is at 16,700. So it has traveled around 5,000 points from that date. That's a huge, of course, that's a huge return in such a short period of time. Those things don't happen often, but this is a good indicator for us to think about long-term returns. Let's see what the present status is. The present status is that the Nifty is kind of taking support here at the 10 moving average. It's kind of taking support. So it went up, it came down here, and is taking support here at this base, okay, on this average of the last 10 months. And the latest month, that is March, it's trying to recover a bit at this point, right? So the best time to invest would be actually somewhere here when it comes to its 20 moving average. This is not the at this point of time can be a good point, but it is not the best. Okay, you can be very confident when it comes to here at the 20 moving average, and really put in money with a lot of blue chip stocks and expect it to go much more. But we see the moving average here kind of taking a turn and being flat, and the candle is taking support at the 10 moving average. Right. So what we'll do is that we'll also see the heavyweight stocks. The heavyweight stocks on the Nifty are HDFC Bank and Reliance. Okay, these are the two heavyweight stocks which constitute a lot of it's a it's a huge portion of the Nifty, and so these stocks kind of influence the Nifty a lot. So where is Reliance standing? You can see again the crossover is almost similar at this point of time, and then it goes up, and it is again kind of taking that support here at the 10 EMA. 10 EMA, right? So you can see almost similar chart, because that is because the heavyweights are actually moving the index. So you will see a similar chart happening over here. Let's see HDFC Bank also. So HDFC Bank has a slightly different move happening here. This lately it has been under a lot of pressure, and you will see that when we see the Bank Nifty chart. Lately it has been under a lot of pressure. So this time is where it seems that the 10 moving average will cross down. That's a dangerous signal. If it crosses down on a monthly basis, it is a dangerous signal. But we'll have to wait and watch to see what happens, whether it just takes support over here and goes up again, or whether it will actually cross and go down. So the banking sector, particularly as HDFC Bank, is under under pressure at this point of time. Let's go back to the indices and see the other indices. Let's see Bank Nifty at this point of time. Let's see Bank Nifty. You see the Bank Nifty. Again, we are looking at it on a monthly time frame, and you can see a similar thing happening. It has, Bank Nifty is actually weaker than the Nifty here. It has actually gone below the moving average. It has gone below the 10 moving average, and that is because the pressure that we saw on HDFC Bank, which is actually taking it below the 10 moving average. So let's say, suppose it comes down to here 20 moving average, it would be a good time to accumulate stocks which are the heavyweights of the Bank Nifty. Let's say we already saw HDFC Bank. Let's say where ICICI Bank is doing the second heavyweight stock on the Bank Nifty index, and you can see a similar thing happening, which is going down on the 10 moving average. So for those people who are confident about the banking sector, it may be a good time to accumulate here, but I would want to wait till it comes to the 20 moving average to be absolutely confident about this stock. Let's move around and see some more indices. The IT index. Let's see where the IT index is going. IT index does not seem to be under pressure. It was under pressure for 2 months when it went straight down. Here, there's two big red candles here at the top, but it again took support here at the 10 moving average, and it is moving up right now. It's moving up right now, and we'll be able to see that in the stocks. Let's see the stocks. The two biggest stocks on the IT index is Infosys and TCS, and you see Infosys moving up, right? Coming down in the last 2 months, taking support here and moving up. And you will see a similar thing happening on TCS also. Much stronger stock, in fact, but then in the last couple of months faced a lot of pressure, and now trying to recover at this point of time. So banking sector stocks, some of the good banking sector stocks, if you want to stay with the heavyweights, it's HDFC Bank and ICICI Bank, and of course SBI and Kotak Bank. These are the four major banking sector stocks that are part of the Bank Nifty index. And if you are looking at long term, it is better to stay with the heavyweights, because they have a greater chance of compounding your return over the long term. What we are discussing today is the long term. So I'm not kind of getting into the smaller banks, because we are not talking about short-term trades. So if you want this, to be in your portfolio for a longer period of time, then we want to look at some of the heavyweights. So yes, long term is not 2 to 3 years. So 2 to 3 years in terms of investments is short term. I would say long term is something like 10 years or more. Okay, that for me is a long-term investment. We are not talking about short-term trades, like getting in and getting out, and booking a small profit and getting out. No, we are not. We want to look at companies which are building wealth, compounding wealth over the long term, and that is the only thing that is going to help you in your portfolio to build wealth over the long term. So we are not thinking about 2-3 years, we are thinking about 10 years. Okay, so when you are thinking about 10 years, then we have to look at the stocks in that kind of a perspective. So that is also one of the reason why we are looking at the monthly charts here. Okay, we are not looking at hourly or daily or even weekly. We are looking at monthly charts. So I want to look back over the years, how has the stock performed. And it has, if it has been a very strong stock in the last 5 or 10 years or so, there is a very high probability that it will continue to compound wealth in the next decade, in the next 10 years. And if that is so, then I would want to have that stock in my portfolio, right? Because it's a good use of your money to be in that stock. Let's because we are talking about banking stocks, let's also look at Kotak Bank here. Look at the charts over the of the last several years. This is like a 5-year chart, right here. Starting from 2016, we have data beyond that also. But look at here. Look at from starting from 2015-16 and going on till date. You see that once the 10 moving average has crossed the 20 moving average, there has been no looking down. Even in the time of COVID, it did not actually cross down. Okay, that's a very strong signal right over there. It did not actually cross down, but touched the 20 EMA and moved up again. So that tells you something about the stock. Yeah, right. I'm not investing in crypto. I don't understand crypto, so I won't talk about it. I'm not the person to talk about it, but I have an understanding of the equity market, so I will stick to that. Yeah. Okay, so we saw the IT index and we saw the bank nifty. Let's look at what pharma is doing. Look at pharma. The pharma has come down in the last couple of months, right down to the 20 moving average. That was a good time. That was a good time to accumulate some stocks in pharma. Okay, because you see that it has taken support at the 20 moving average, and it is now trying to go up. It is facing some resistance here at the 10 moving average, but once it crosses the high of this candle, of this high, what is the high? It is 13,688. It crosses the high over there, it's bound to move a little further along the way. Let's look at some of the index heavyweights on the pharma sector. Dr. Reddy, it's a dangerous point. We have to wait and watch whether this crosses down over here. If you are looking at fresh positions, you want to wait and watch and see whether it is actually crossing down, or it'll just touch and go back. Yeah. So let's also look at Cipla here. Cipla seems to be much stronger, and it is consistently moving out at the 10 EMA. In fact, it took a bounce over here, right? So for those who had accumulated, it went down. It went down the 10 EMA also. For those who would have accumulated at this position, it has taken a bounce over here. So those two are the most the heavyweights on the pharma index. There are other stocks also. Even I will not give you stock specific. I will not like to do that because as I said in the disclaimer earlier, I'm not a SEBI registered analyst, and whatever we are doing here is only for educational purpose. So we are just looking at, I don't want to give trading recommendations or investing recommendations. What we are looking at is just how to analyze the market. So you can build your own understanding to put your money in a stock, let's say for the next 10 years. What would you want to do? Which stocks would you select? So just to build your understanding on that, we'll try to build our knowledge on that. Look at the auto index. The auto index has come down to the 20 moving average on a monthly time frame. Okay, on a monthly time frame. On a monthly time frame, it has come down. So is it a good time to look at these stocks? Let's look at some of the heavyweights. Who are the heavyweight? Bajaj Auto, Maruti. It is below the 20 moving average. Look at this. It is below the moving average. How has it performed over the last let's say 7 years or so? It is gradually going up. Not a heavy compounder, but gradually going up. Did a cross down over here, went up over here, and stayed in this position for quite a number of years. But after the COVID crash and after the COVID recovery, staged a smart recovery and came back over here. Yeah. So this is probably one of the good stocks that you would like to have, not a major portion of your portfolio, but still a good stock to have, because over the years you see a decent return on your stock. Can you see this? What I'm saying is the 10 moving average is not crossing down. It is consistently staying above the 20 moving average, and that is the sign of a strong stock. At the end, okay, we'll try to look at at the end, if we got some time, we'll try to look at those charts. Okay, so this is one. Let's look at Maruti. What is happening with Maruti? Again, below the 20 EMA, but I don't find this last, let's say, what is the time over here? From 2017 onwards, or 2018 onwards. Okay, it has kind of stayed in this range. That is not, that doesn't seem to be, very helpful, right? You see this, it is staying in this range for the last 4 or 5 years. Okay, so what does that mean? Over the last 4 or 5 years, it is not actually compounding. But previously, it was good. And it was going on very well. 2014, 2013, 14 onwards, going right up to 2017. But after that, there has been a stagnation in this stock. So even though it has come down here to 20 EMA on the monthly charts, I would not be very comfortable with this stock because of the stagnation over the last 4 or 5 years. What it means is that it has not compounded money over the last 4 or 5 years. Okay, so but if it crosses this high over here, okay, then we would be willing to look at it again. If it crosses this high over here, so that would mean that the 10 moving average is going higher. Okay, so we would it would be a good time to look at it again at that time. The metal index has performed very well over the last few months, and it has staged a very great move. So some of the stocks on the metal index are Hindalco. Hindalco is a heavyweight. Let's look at what Hindalco has done over the past months. Look at this. What is happening. You would not imagine a slow stock like Hindalco moving so fast, but that's what has happened here on the monthly crossover. Right after the monthly crossover, it has moved fast, and it is still moving higher. In fact, it is at its all-time high right now, right? So that's how you look at it over the long term. The heavyweight, another heavyweight on the metal index is Tata Steel. Again, in the last several years, it has been stagnating at this portion. Several years, 2006 onwards, it was stagnating at this level. But suddenly here, when the metal index is moving, it is also moving. Let's say I want to look at the metal index over the years. This is the metal index over the years. Not quite a thrilling performance, right? It is going up, going down. But from here on, it has moved up really fast. So this is the kind of opportunities that you could spot, even in sectors that are boring, like the metal sector, which actually doesn't move much, but suddenly after the COVID crash and the COVID recovery, it has staged a very smart recovery. So you could spot opportunities like this, even though they are not actually things that you would want to hold for 10 years or so. But you could, there is a possibility that you can spot the opportunities when they happen. Look at the FMCG index. So Marico, Hindustan Unilever are the stocks which are heavy on the FMCG index. The FMCG index has not crossed down the 20 EMA. Even in the COVID crash, when the market was down 40%, it has not crossed down. It is still steady and steadily moving upward, and it is very close to its 20 EMA right now. Right now, it is very close to its 20 EMA on the monthly. So we want to look at the FMCG stocks. What are the FMCG stocks doing? Hindustan Unilever, look at this. It's going down. You would want to wait and watch on this and see for signs of recovery. And when you see signs of recovery, it could be a good addition to your portfolio. Let's also look at Dabur. Wow. Look at that. Look at that chart. The Dabur chart has never seen a cross down right from 2013 onwards. It has never seen a cross down. Okay, and now it is standing right here. It is taking support, in fact, on the 20 EMA at 540 levels, and this could be a great compounder for the future in the FMCG segment. So we looked at the indices, and we looked at the stock specific charts based on the indices. Right, that's what we are doing. I hope you understand the strategy that we are using over here. Let's also see Marico. Okay, it did cross down here for a while, but then going up. So it has not been as steady as Dabur, but is slow and steady kind of a stock. So Nirmala, you want to look at each of those stocks like we are doing here. So I'm telling you the method of looking at the stocks. If you want to look at the stocks, then you look at the charts and look at the indices. And if you feel comfortable, if you feel that in the last so many years it has compounded your wealth, then you would be comfortable to take it for the next 10 years, right? So look at every chart in that manner. I would want to suggest to you, please look at the charts in that manner. Look at every chart. If whatever the company is, BSV or Adani or Reliance or any other company, look at the charts. Look at the charts. We actually saw the chart of Reliance, but I will just look at it again. Look at what Reliance has done over the years, right? It has remained stagnant here for this long period of time, starting from 2000, let's say 2009-10 onwards to 2017-18 to this level. So for 7-8 long years, it has remained stagnant. Would you be comfortable? Would you wait for 7-8 years, before it starts compounding? So that's the decision that you want to take. But also you also look at the opportunity. So maybe you don't want it to hold it for 10 years, but you also look at the opportunity that it is giving a monthly crossover. It is a heavyweight on the index. Okay, so I would like to allocate some portion of my money to this stock, and not a major portion, but some portion of that money, and probably it will give me a decent return over the long term. But again, you never know, because the crossover has Am I audible? I think I lost connection for a while. Okay, thank you. Can you see my screen? Okay, just a moment. I shared the screen again. Okay, thank you. So yeah, so that's what we did. We went over the sectors, we went over the stocks, and I'll also tell you a couple of good tools which will help you to find out these things. So these are technical screeners and fundamental screeners. So one of the screeners is chartinc.com. Okay, you will find a good screener at chartinc.com, and you go to this link, that is screeners, and then you just search for a, let's say, 1020 crossover is what we are searching. Okay, what we did, a 1020 EMA. So search for a 1020 crossover, and there are some good genius people who have already made the screener here, right? So you just borrow that 1020 crossover above, right? Click any one of them, and you will see the screener. Okay, we can change it according to our needs. So I'm doing a monthly EMA, monthly close 10 crossed above the monthly EMA for 20, and I want to look at Nifty 200 top stocks. Okay, and I run the scan. So Coal India is the one that comes on the screen. Coal India. Let's look at Coal India. Look at Coal India. So Coal India is on the verge of a monthly crossover. It's almost done here. Okay, so there's an opportunity over there, but would I want this stock for the long term? No, I don't think so, because look at what it has done. It has actually destroyed wealth over the long term. So I don't want this for the long term, but there is an opportunity here happening for those who want to take a call on it. Let's look at what is the volume suggesting. Okay, quite decent bit of volume here in the last few months. Okay, more than the average volume that it has seen over the past years. There's quite a decent bit of volume over here. So it's quite possible that this can see a jump over the years, over the maybe couple of years or so. So because we are looking at the monthly chart, so we are, we will be expecting the target over a few years. Okay, it is not a small term, it's not a short term thing. But would I want this in my portfolio? No, I won't want this, because look at how it is going, right? So this is a way that you can use the crossover. Just for the sake of understanding, I'll take Nifty 500 here. Although if it were my personal portfolio, I would not have gone into a Nifty 500. I would want the top 200 stocks. Nifty 500. Okay, let's see. Now we want to see monthly, so we put monthly over here. We want to see an exponential average, so we do exponential monthly close 10 crossed above the monthly exponential average of 20, right? And I run the scan on Nifty 500 stocks. There's no more. There's only Coal India that's happening right now. But you can keep doing this, and over a period of time, you will find the stocks coming over. As the markets recover, you will see stocks being listed over here. Screener.in is the other tool that I wanted to introduce you to. Screener.in. This is a good screener for fundamental stocks, fundamental analysis, right? So the stocks that you are taking in your portfolio, you also want to make sure that they are fundamentally they are strong, they are giving good results, they are fundamentally strong, the business is strong. You also want to check on that aspect. So that is why we can use this tool, which is Screener.in, quite a good tool that is providing a lot of things available for free. It's a wonderful tool. Look at, I'm just looking at Dabur. We saw the chart of Dabur. It was quite at a quite good level. Look at the ROC, return on capital employed, it's 27.3%. Return on equity is 23%, which is quite good. Let's say if you put your money into FD, you get 5%, 6%, or you're putting your money in Dabur, the Dabur business is earning at 27%. So that's how you look at it, right? The price has actually come down over here, and so probably it's a good time. There are some pros and cons. The pros, company is debt free, and so many pros, and the cons of what has happened according to their perspective, screener's perspective. You can have a peer comparison with the other stocks in the FMCG sector. You can have a look at it. I like to look at the profit and loss statement over the last 10 years. So they see that it starts from 2010 onwards, and I want to see how it is growing over the last 10 years. The sales, the expenses, the operating profit margin, profit before tax, and the earning per share, EPS, over here, right here, starting from 2.89 in 2010 to 10.39 as on date. And you see the compounded sales growth, the compounded profit growth, the compounded stock price CAGR, and the return on equity over the past 10 years. So quite a good tool to use for fundamental analysis. And then you have the balance sheet, the cash flows, the ratios, the shareholding pattern, who are the promoters, which are the FIIs who have invested into it, which are the domestic institutions that have invested into it over the years, and the public shareholding in that account. So this is a good tool for you to check the fundamentals of the company that you want to invest over the long term. Okay. So those are the two tools that I wanted to talk to you about. Charting, you have the screener, you have the technical screener, and for the fundamental screener, you have the screener.in is what you can have. So thank you so much. Those are my connection points. Let me see if I have some. I can answer some questions. BSC for the long term. Okay, let's look at the chart of BSC. Look at the monthly chart. It has not done well from 2017 onwards. When it was listed, it was actually going down. The 10 moving average was going down, but now it has recovered, and this is a recent phenomenon for this stock. And volumes have picked up over here, and now it has recovered. It has staged a very smart recovery in this post-COVID stage. You also want to go back to screener and look at the fundamentals of that. Is it doing well in terms of the ROC and the ROE? Look at the ROC, 8.58%. Do you want to invest money in a company that earns 8.5% in its business? Do you want to keep it for the long term? The return on equity is 5.89%, which is actually pretty dismal. Okay, so here the pros and cons are given over here. You want to see the profit and loss over the last 10 years. What is the growth? Compounded sales growth, 2%, 0%, minus 2%, and trailing 12 months is 26%. So the rise here is a pretty recent phenomenon. Personally, if you would ask me, I would like to wait and watch and see if this the operations of the business is it going to continue well for a slightly longer term. and then I would want to decide. But this is, what I'm saying is for the long term. This is not for the short term. What I'm saying right here is for the long term. It is not for the short term. As I said earlier, this crossover can also be a good opportunity for a medium term, getting in and getting out. So but today I just concentrated on long term stocks which you actually don't want to sell at all. Okay, that's the kind of long term that you want to think. You want to give it to your children as a legacy. Those kind of stocks. Those are the places, those are the stocks, and those are the businesses which actually create a lot of wealth in the long term. Reliance we already saw. Do you have any small case product? We have small case product. Those are good products, and we are also distributor for small case products. So any basket for the long term. So this is I would suggest do some work for yourself also, because my basket would be different from your basket, because our risk appetite is different. So but I also showed you how to look at the indices and kind of focus on sectors. Right now, which is the sector to focus upon. We saw auto is in a good place, we saw FMCG is in a good place, but those are not the right now. It is not the most favored sectors in the media right now, right? Because they are down actually. So when you're investing for the long term, you want to get it at a good price, then those are the sectors to look into, and the heavyweights in that sector are the one that you want to accumulate in your portfolio, right? So how does PE and PB ratios affect a stock? So we looked at the screener, Dheeraj. So here you can see the stock PE over here, which is the price earnings ratio. It is 64.3, right? And the book value is 558. So profit to book value ratio. So these are, let's say, they are indicators. So what the P ratio is, what is the P ratio actually telling us? It is saying that the earnings per share, the price of the stock is 64 times the earnings per share. That's what it is saying. So you want to look at the company and decide whether you are willing to pay a premium. Let me try to explain it again. So when you see we are looking at the BSE here, BSE Limited, and the stock PE says 64.3, which means that the stock price is actually 64. The multiple is 64 for the earnings per share, right? So the earnings per share is X amount, and 64 times that amount is the price of the stock. So would I be comfortable buying a stock at that price? That's what the PE wants to tell you. If you're comfortable, because these days the valuation are stretched. So this PE would not be actually, you cannot rely on the PE as a sole indicator for your investing decision. Same goes for PB also, for the book value. Those are good indicators, but not in isolation. I'm not investing in the US markets directly, but I have I invest through ETFs and mutual funds into the NASDAQ and the S&P 500. I do that. So, but I don't invest into the US market directly. So yeah, see, Vaibhav, one of the good things about technical analysis is that you can apply it to any chart. So we cannot apply. The screener.in does not have a fundamental analysis of US stocks, but you go look at the charts of the of the S&P 500. You look at the charts of the Dow Jones. So you look at the charts of NASDAQ. Look at the monthly charts. Where are they going? Are they close to 10 EMA? Are they close to 20 EMA? In fact, NASDAQ is a lot has lost a lot of value recently. But look at those indices, and then look at the heavyweights in the NASDAQ. Which are the heavyweights in the NASDAQ? The Alphabet or the Meta platforms, Netflix, and all of the FANG stocks that are there, Google. Right, look at those stocks. Where are they standing in terms of 10 EMA and 20 EMA? The same analysis can be done. for that. And I don't know of any website that gives the fundamentals, but of course on the individual company websites you will definitely find their annual reports, and you can look at what is the progress, fundamental progress over the last 10 years or so. You can analyze those stocks in the same manner. Yes, I would not like to predict about the growth possibility of anything, but I would like to look at the charts. Prediction is actually, it's good. It is very thrilling, and you can have goosebumps with your predictions if they go right or not. But that's not the way. That's not a way to. What should I say? It's not a very reliable thing. No, better to look at the charts. You have to look at the charts, and you see that you see that the 10 EMA is going up. Let's invest in that stock. You see the 10 EMA is going down, get out of that stock. No bias. Why there's no need to have any kind of a prediction bias. You see, it has been compound. If the stock has been compounding wealth over the last 10 years, there is a very good probability that it will continue doing so in the next 10 years. So you want to take a bet on based on the probability, the best probability. But if it doesn't, let's say it doesn't, and your analysis goes wrong, the monthly 10 EMA crosses down, then get out of the stock, find some other stock, right? There are always, the universe is wide open. No, I don't have the chart of the FANG companies over here on my trading account over here. But maybe investing.com or some other website would have that. Right. Any other questions? So I've showed you the basic way of which, the method on which you can do. You can apply it to FANG companies. You can apply it to Indian companies. Technical analysis is the same everywhere. So yeah. Yes, you can look at Bitcoin also in the same way, but Bitcoin is, it doesn't have a 10-year history. I don't know if there's a 10-year history on the charts that is available. I don't think so. But it's too volatile in the short term. It's too volatile in the short term, and I would rather, if you are doing. I'm not an expert on crypto, so I will not I will not venture to tell you anything about that. But my view is that you can look at it for the short term, but the long term I don't think it is there. It has not, are the charts available for long term? I don't know. I'm not into crypto, so I don't know it. Right. Okay. So we'll end this session over here, and thank you for joining. Thank you for asking all these wonderful questions. I hope this is helpful, and I hope that it will help you in your analysis. We'll keep sharing on more of these things, and if you want to connect, then these are my connection points. We'll see you soon. Thank you so much. Bye bye.